What's up, Mortgage Coach community? Dave Savage here, and I am interviewing a black belt in Mortgage Coach who's also a power user. Welcome, Greg Anderson, to the call. What's up, Greg?
How you doing, Dave? It's Friday.
It's Friday. Well, thanks for making time on a Friday. It was good seeing you in Seattle. I think, was it two weeks ago?
Yeah, great event put on with Dan Keller and my coach this semester in the core, Jeremy Forcier.
Oh, right on. Jeremy's your coach. That's awesome.
Yep. Super excited.
Well, I love that event. It's always good for top professionals to get together and mastermind. So I thought that was pretty cool all by itself. So Greg, if you can just tell everybody, what market you're in, a little bit about your production, a little bit about your team, so they get a feel how you do business.
Yeah. So I'm in the Seattle market, just a little south in a little town called Renton, home of the Seahawks. And so last year we did 206 units for $77 million. I've got 5 full-time staff, 4 production staff, and 1 marketing assistant. I just hired my first LO into the branch. We just opened up a brand new office here in town, and we're really excited about the year ahead and, getting after it.
Love it. Share a little bit about your business source. What's your primary source of referrals? And I kind of already know where the answer is going to go. It's Realtors.
Right.
And if you could also describe, how many Realtor relationships you manage, just get a feel for how you bring in all this business.
Yeah. So Realtors are our primary focus. Of course, we have some other people sprinkled in there. We also do a pretty good job with our past clients and our database. I thankfully grew up in Renton here, so I'm pretty connected in the area with quite a few different groups and that, so that helps. I would say probably our main focus is just trying to help Realtors grow their business. And, out of that comes opportunities, obviously. So we're always, checking out Mortgage Coach and looking at the videos, trying to learn from others. I'm a big believer in don't try to reinvent the wheel. There's people out there that are doing it bigger than me. I just need to follow them and see what they're doing, take their ideas and maybe put my own little twist on it and try to add value really is, I think, the key. So last year, we got at least 1 closed loan referred from 53 different Realtors. It's probably pretty similar to the last few years, right, in that. So we're always, in contact with 120 to 150 agents at any given time and trying to see how we can help them and help their clients.
Love that. So you're managing 150-ish relationships. You've got 53 that trusted you enough to refer business that you did a transaction for. It's great to know that you're active in our YouTube channel. It sounds like you watch videos there, and I know you also tune into our Facebook group. So thanks for being an active leader in the community, and thanks for giving back with this interview right here. And I've interviewed you before, so for anybody that wants to learn more about Greg, I'll put a link down below to our last interview. So let's get into Mortgage Coach. We believe that I think it's always been a great competitive advantage to be like this mortgage advisor. Be fiscally literate, have advice be one of your value props. I think going past this year, it's essential to your survival as a referral-based loan officer. I'm preaching, I'm evangelizing that you've got to build a personal brand, and advice needs to be a tangible part of your value proposition. Right. So this interview is called a mortgage strategy interview. It's number 23. So there is a playlist. If you want to listen to some of the others, which I recommend that you do, it's all centered around how you deliver advice. So first of all, how often and what percentage of the clients that you serve do you do a total cost analysis for?
So we're giving a total cost analysis to 100% of our clients. In our branch, it's a non-negotiable. Everybody that we come in contact with, or we're to a point where we're actually running scenarios. We use Mortgage Coach. We don't have any other platform we use. My background is I was a financial analyst for the county before I got into doing mortgages about 15 years ago. And so when I learned about Mortgage Coach, it really just kind of laid right in my lap. Like, this is something that I can wrap my brain around, and I use it really to try to separate myself from others. If folks are going to an online lender or they're going to their local credit union, they're pretty much getting a cost sheet, right? And I always tell people in my branch, like, hey, if you're developing a cost sheet and sliding that across the table, you're just telling that client that you're not really adding any value to them. So why wouldn't they take that cost sheet and take it to another lender and try to beat it, right? And so we do a minimum of 3 scenarios for every client. Typically, we'll go 4, but minimum of 3.
Yeah. So you're providing value. You're having a great conversation. You're asking about goals, and then you're delivering something of tangible value. And you're doing it for everyone. I'm also going to put a link down below to my most recent LinkedIn article. It's called The Most Common Practices and Habits of Top Producers. And the first one on the list is consistency. You notice that Greg is, he's got a process, he's got a way of doing things, a branch non-negotiable, and he's doing it consistently. So hopefully that's a takeaway for folks. So I like to get these tactical and practical. What are some of the questions you ask, and what is some of your scripting before you deliver the total cost analysis, so that by the time you deliver it, it's like, oh, I wanted it, I'm excited about it, and it's perceived as something valuable?
Right. So what I tell people is the first thing I want to know about them is, what are their goals, obviously, for obtaining a mortgage, purchasing a home. I want to know what's important to them. How much money do they have put down? What's their preferred payment? Not what they qualify for, but what's their preferred payment? Give us basically some parameters to start with. I want to know, like, if they tell me, hey, I don't want to come out of pocket with any more than $25,000. Okay, well, I need to at least have one of those scenarios not exceed $25,000 out of pocket. And then if they have another one where they say, I don't want my payment to exceed, $1,500, right? I'm going to have one of those scenarios that meets that. And then maybe the third scenario is, hey, this is what you qualify for based on the guidelines of the program you're looking for. So that way I'm going back, I'm delivering something to them that they asked for, right? They didn't necessarily ask for what's my max. They asked for a cash to close figure. They asked for a payment figure. I'm showing this in addition, right? So that's where I like to start. I want to give them what they requested from me, and then we'll start going in, a little bit deeper at, once they're out there and they're looking at homes and they find, wow, I can't really find anything for $1,500 a month. Right.
So I like that. And it's a little, I've heard similar things, but I love that, how you're like, I'm asking them what they want. One of the options starts with that, and then you're, call it playing checkers.
Right.
But then you're giving them some chess moves. You're providing some things so that there's value. And I know you mentioned earlier that Jeremy is your core coach. And at least from what I've heard, I haven't been to your event, that at the core, one of the imperatives is becoming I don't know if it's a mortgage wizard, financial wizard, but
right,
really showing up as, I'm a value provider. I've got advice and insight that other loan officers don't have. Is that part of your strategy and how you set that up?
Yeah, it really is. I feel like with the opportunity that we have as loan originators, and the kind of life you can live and compensation, I feel like you have to be a wizard. It's no different than playing a professional sport. If you want to be at the top, if you want to be in the NBA, then you need to add value. You can't just be a guy that's good at shooting. You gotta add some other value, right?
Yeah, I like that. In fact, I think I always try to come up with a creative way of titling these. It's going to be how to be a mortgage wizard. with Greg Anderson. So let's just keep that the theme as we keep going here. So I got it. Hopes and dreams, big goals. I'm going to give you what you asked for, not necessarily hopes and dreams. And then I'm going to add some options, at least 3. And I'm going to start to get to be a little more sophisticated and go from 101 to 102 advice. So let's do this. Let's get into a TCA. I'm going to have you pull one up. Before we actually start talking through it, how do you, when you give it to the client, whether it's an email, whether it's in person, what do you call it? I mean, do you call it a total cost analysis, or do you have some other name for the report that you're going to give?
Yeah, I mean, I most of the time I call it total cost analysis. We'll maybe mix it up a little bit, but typically I like the fact that you're saying total cost analysis. So you're showing them the total cost of whatever scenario you're laying out for them. I think that just that title leads, that client to believe that you're giving them everything. You're showing them everything. So you're not hiding this fee over here or something like that, right?
Yeah, I think Jeremy, I've interviewed Jeremy countless times, and since he's your coach, I'm going to put a link down below to his 5 questions that he asks every realtor.
Yeah,
but I
awesome.
think he'll call it like the Jones family total cost analysis. He'll put the family name and then TCA, and he'll put that in the headline. He'll put that in the email. And so it's like, hey, it's something for me, my name, report. So
we do that as well. We do a hyperlink with the Jones family cost analysis or something.
There you go. So that's what you call it. Family's name, total cost analysis.
Yep.
So let's pull one up. Pull up the screen, and while you are a story all on yourself, the level of success that you have, the way you do business, every one of these total cost analysis, it's a family story. So tell us the situation, whether you want to call it a sales situation or a family situation, and tell us what you did here.
Yeah. So actually, Dave, this one kind of warmed my heart. So sometimes I really believe in why, right? Why am I doing this every day? Why am I, grinding it out, making all the calls? Why am I, taking the time to produce a total cost analysis? And, for me, as I'm sure it is for most people who are subscribing to your channels, is you really, really care about providing that high level of service and making the experience for that family memorable, right? So that's kind of where I'm at. So this one was really, really fun because it was a family that purchased a home at a really great time in the market up here. It was 2012 when they purchased their last home. Okay. And they're not high earners by any stretch of the imagination. They both work, probably upper middle class jobs, but they're not, $100,000 a year people each or anything like that. So it was really important to them, and they didn't even know this, but it was really important to use their funds that they were able to get out of this windfall of selling the home they purchased in 2012 at the bottom of the market, and using that in the most impactful way possible. Okay. So what we did here is these folks had some credit issues. Okay. And they had a lot of debt, really is what it came down to. They had a lot of debt, and they're, I want to say, I'm going to check on this over here. I want to say their other debt. Yeah, see, if you look at this here, they were $2,182 a month in revolving debt. Okay, wow. They just had a lot of debt. They had done some things to the house. They'd taken the family on vacation. Kids in soccer. You know how that stuff works, right? It gets expensive.
Yeah, right.
So they're just trying to keep up. They're trying to provide for their family, and they ended up with a lot of debt. So what we ended up doing in these scenarios here is they originally said, hey, we think we're going to get about, 100,000 out of this house. And we want to hold back about 15,000 in our account just to have for a rainy day. And that's, I think everybody should have a little bit of money for a rainy day. So I was all behind that. They said, we just want to put the rest down. We want to have the lowest possible mortgage payment. So, that's kind of where we started, right? I said, all right, well, your credit score is a little bit low, so your rates are going to be a little higher. So I wanted to show them, if you take that $85,000 now that you have to invest and you put it down towards this new home, okay, you've got a couple of options, right? There's one with no fee here at a rate of 5 3/8 with their credit score, and the other was a rate of 4 5/8. And that was basically keeping their cash right around that $85,000 cash to close. You can see their payment with debt and everything like that in there. Their payment was going to be, let's see, I think I messed this one up real quick, Dave. Sorry.
It's okay.
I just realized I was teaching one of my loan officers here.
Yeah, well, the beauty is everybody's getting to see how fast you can change it. So
Exactly.
Notice that 1, you're getting into different details. 2, he's going to be able to change this. By the way, he could have changed this and updated on his mobile phone.
Yep. And I do that all the time, by the way, too.
Yeah. So we're going to go in. And by the way, if you're not the losing mortgage coach, it's like, oh, I got to create another free worksheet, PDF it, email it. On the consumer side, it's not mobile optimized. Here we are. He's going to make edits on the fly, and they're going to be updated on the consumer experience.
Right.
Also, for everybody while you're doing this, Craig, it's live. Like if they pulled it up on their side, they're seeing it change live. Like you can run the numbers, talk about being a financial mortgage wizard. When you're like literally moving their mobile phone or their desktop and it's changing before their eyes and you're highlighting things, you are the mortgage wizard, so this is like the wand for mortgage wizards. All right, keep it going here. I'm loving it.
Okay. Now I realized what I did. I was actually showing a new loan officer that I just hired in my branch. I was kind of showing him some different scenarios. So I had added, hey, look at what if they took that money they were saving and put it towards the mortgage, right? So that's something I love to do too.
Another mortgage wizard move powered by Mortgage Coach is that you can start to play scenarios. Hey, what if you took 1,000 and prepaid your mortgage? Or hey, what if you took 500 of it, invested it with your financial planner, and you took 500 of it and invested in your mortgage? So you can really, when it comes to being the mortgage wizard, everything you could do as a mortgage wizard, you could do with a mortgage coach.
Absolutely.
I love it.
Absolutely. And the thing is, just to kind of go back and play on that, Dave, is this allows me to show somebody what's in my brain, right? So that this stuff is in my brain. I'm always thinking about, okay, what could we do differently here? What could we, how could we use their funds to close in a better way that would get them in a better position financially? Because most of my clients, last year, I think my average loan amount was, just over 400,000, which in the Seattle area, it's kind of a starter home. It's not the high end. So a lot of my clients can really benefit from some other advice beyond just, hey, here's the 30-year fixed rate today, right? So what you'll see here, I got that fixed. What you're going to see is I was able to pay off all of their debt. So remember, they had $2,182 monthly going out, okay? What I did is their credit scores, they needed some help with credit, okay? And so they were going to have to be an FHA loan regardless, even with the larger down payment. Just was where they were landing, okay? So I was able to go and use 3.5% minimum on the FHA loan, and I was able to pay off all of that debt except for one car that was $639. And the reason we didn't really focus on that too much was because there's only a couple of years left on that, okay? So they went from $2,182 to $639 out in their debt, okay? So if you factor in all that debt that they had before, if you look at, scenario 1 here at 5677, this was their mortgage payment plus their other revolving debt payment. Okay.
So I want to make sure I'm connected on now.
Yep.
Did they buy? Is this a move up where they did this and bought another house, or was this a pure refi?
This is a move up.
So guys, connect the dots. And how much extra lifestyle did they get? Like the house that they moved up into, was it a better neighborhood? Did it have more rooms? What was the lifestyle difference between the situation here?
Absolutely. Better neighborhood, bigger house, kids are growing up, you know, a situation that they really felt was important for their growing, you know, their family and raise their kids in.
So guys, listen to this. So hopes and dreams, obviously in this case, part of the hopes and dreams was not having the monthly debt, removing some financial stress, because that's why they had credit issues. I'm sure they had stress, and they have lifestyle. So this family, you know, got a bigger house in a better neighborhood. You remove the financial stress, and you use the total cost analysis to show them how to do it. This is awesome.
Right. So at the end of the day, with their new house payment on this new house that they're really excited about and paying off that debt, their total monthly outflow was $45.62. Now, their original scenario, when they came in and said they wanted to put it all down on the house, their total monthly outflow was going to be $56.77. So we saved them over $1,100 a month in cash flow. Okay. For a lot of people, that's a huge, huge number. For these people, it means they can breathe easy. They can afford to, you know, take their kids on vacation. They can make sure their kids get the best soccer equipment and that type of thing, right? It's huge.
So Greg, real quick, if you could scroll to the top where your picture is.
Yeah.
I want everybody to connect the dots. I mean, not only is Greg a mortgage wizard, Greg is building a personal brand. You know, it's got his company brand. It's got his personal brand. If you could click that menu up in the left-hand corner.
Yeah.
If this was, you know, a family that was Spanish, you know, they could click the translate button, read it in Spanish. They could print it. They could share it. They could change the view. You know, so it's a dynamic, personally branded advice experience. So this is awesome. You know, one more thing before we either talk more about this or do one more. I'd love to see one more story strategy, although I'd like to keep these under 25 minutes. So let's try to do the next one pretty quick.
Cool.
How do you position Mortgage Coach with agents? Because I mean, you're obviously showing up at a higher level. You're delivering more value, obvious value to the family. How do you position this with agents so that they're giving you more referrals and that they see you as more value? How do you describe Mortgage Coach, or how do you introduce it to them in a way that's business building?
Yeah. So typically what I'm doing with my agents is I am showing them that I do this. Some agents, I will CC them when I send out the email. Others don't necessarily want that. So, but I do let everybody know that this is a pillar of the advice that we're giving their clients. And I explain to them that, you know, most banks are just giving these clients one option. And it really is. It's so common for me to see, you know, hey, I walked into, you know, XYZ bank and here's the cost analysis they gave me, one sheet, right? They're not giving them any other options. Well, did you know that there's actually other rates available and with different costs? Well, no, nobody talked to me about that, right? So I'm just explaining that that's part of our process and letting them know that all of their clients are getting this. It's cool because I've really embraced the mobile. I can share it super fast with text. Try to get my agents and clients to download the Mortgage Coach app right away. It's something we cover, you know, very early in the process. So they're expecting it.
Love it. So connected out survey. Greg is not just showing mortgage options. Notice he called them scenarios. So he's providing mortgage scenarios. I see a lot of Mortgage Coach loan officers call them strategies. So strategies 1, 2, and 3. But he's saying, hey, this is how to build wealth with real estate faster by making better mortgage decisions. Let me show you how. And then we don't have time to get to it in this interview. He's doing annual reviews. He's like, and I'm going to manage your mortgage decision over time by reviewing it and keeping it updated. So Mortgage Wizard, obvious choice. And then with Realtors, And the thing that we coach and train is that, hey, I can create more clarity for your clients faster, which is going to translate into a sense of urgency, whether that's a rent versus own or a move up analysis, that's going to improve your conversion rate. Because at the end of the day, realtors want to sell more homes. You know, they want better communication so that it saves them time and money, and they want better conversion. And so I just because I've interviewed Greg before, I know that it always comes out to what's in it for you, Mr. Realtor. And so Greg, anything else on this one before we do one more mortgage strategy?
No, I think we covered the gist on that one. I'll show you this next one. I'll go really fast on this one, Dave, because I know we're up against some time. So this was a client who came to me like everybody, right? I want to put 20% down because I don't want mortgage insurance, right? That's, everybody does that. So we started looking at it. He was just very concerned about his payment, and really he didn't want his payment to go over around $2,500. When we ran 20% had him just over his $2,556. He was just very dialed in on his budget, which I appreciate. There's a lot of people who could take this tactic. And so we really wanted to figure out, well, how can we get this a little bit lower? So, I was looking at a situation and I said, all right, well, what if we did 15% down? We have a way of buying out of the mortgage insurance. You have a car payment of, I think it was $542 or something like that. What if you had $13,000 left on your car payment? What if we put 15% down, you pay off the car payment, and then you're going to have that payment, really where you want it, a lot lower. He's like, oh, wow, I never really thought about that. So then the next step I took was, okay, what if you said I'm comfortable with 2,500 and you wanted to take and put in shorten your mortgage? So I said, okay, great. Like, we do the 15% down. I said, if you put $400 back towards your mortgage every month, you're going to cut 10 years off. It cut it down to a 20-year loan by taking what he was already paying out every single month. Okay. We actually lowered the cash to close by about $2,600. And he's going to pay off his mortgage in 20 years. It's a strategy that's not rocket science, but if you are a computer programmer or whatever it is you do for a living, it's something you're not thinking about. So somebody like me to share that with him is huge.
I love it. So I grabbed the screen on my side. Hopefully you guys can see it. Greg, could you confirm that you can see my screen real quick?
I can, yep.
So I am doing interviews like this all the time. We have a playlist called Mortgage Strategy Interviews. This is number 23. So there's 20 plus interviews like this one. You'll notice Hunter Markowitz, I think a core brother of yours.
Markowitz, yeah.
Hunter. A number of just great interviews to help you. We've got a playlist of our best ones from 2018. Cody, I think he's in your market.
Yep.
So I want to recommend to everybody on this call, if you are already a mortgage wizard, you can still get better. In fact, I hear from all the mortgage wizards that they're watching each other, picking up new tricks. If you're a new loan officer, watch every one of these. Click the playlist to get busy. One of the things we're doing at Mortgage Coach to help you guys this year is we're trying to take some of the best of our interviews and put them in an obstacle course. Think of it as like a training obstacle course. We call this Mortgage Strategies. So we've taken some of the best interviews like this and focused on specific strategies like, rent versus buy now. And then if you click on that, you're not only getting the video, but you're also getting links to the sample reports, and you're even getting some scripts. So I will put the links to today's interview down below. I do want to remind you, every single time I do an interview with a link that's involved, if you click down and you look at the description, there'll be the links to the TCA in YouTube. But in our website, Mortgage Strategies Interviews, we'll even have scripts. So I want to remind everybody, if you haven't already done it, make sure you subscribe to our Mortgage Coach Productivity Mastermind. This is the place where the best in the country just get better at delivering advice. Want to also highly recommend you check out me on LinkedIn. If you don't already connect with me, please do. Look at my most recent articles. Greg, as we wrap this up, any last words of wisdom for the mortgage coach community? Think of yourself as now you're the sales coach and sales trainer, and we're trying to get people to upgrade their skills and habits. Any last words?
Yeah, I just would reiterate that you are not alone. You are not blazing the trail. Somebody has already blazed that trail. So find someone that has a similar style to you. So find somebody that you really admire and follow their lead. That's what I do. I'm not the smartest guy in the world, but I find guys like Dave Savage, Jeremy Forcier, Rick Ruby at the core, and just follow somebody who's done it better and bigger than me, just to try to get there.
I love it. It's been a great interview. If you got a takeaway, if you got value, give us a like. Let us know you liked it. Share it with your mortgage friends. If you were a branch manager or a leader of loan officers, I think this has been a fantastic call for anyone who has the ambition to be a mortgage wizard. Check it out. Hey, I appreciate you, brother. Thanks for making
it. Dave. Thanks, man. I appreciate it. Have a good day.
You too. Take care.